is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to the Trader's Edge. I'm your host, Steve Rhodes. I hope you had a fantastic weekend, folks. I know I did. And now we're off to the start of marvelous, wonderful Monday. Hopefully, just do a little stretch, just kind of bend that spine a little bit and release that cerebral fluid to your mind, folks. Now, the markets are down this morning. Got the Dow off about 98 points. S&P's off 12. NASDAQ off 20. Small caps off 7, 8. We're going to go see where these markets are headed to. Looks to me like they're headed quite a bit lower. They're absolutely going to be testing some very key support areas. We're going to take a look at those. We can take a look at anything else that you'd like as well. You can always give us a call here, 877-927-6648. And, before we go to the markets, let's just, start off with a great thought, and that is, folks, identify your problems. You absolutely want to always identify, whatever it is that's holding you back, whatever problems you got to deal with. But where your focus should go, folks, 95% of your time should be spent on your solutions. Unfortunately, a lot of folks spend about 95% of the time on the problem. Spend 5% of the time on the problem, identify your problem, and then come up with a whole load of solutions, folks. That's where you need to spend your time. We take a look at solutions in these markets and where the markets are going. We take a look at A to B equals CD patterns, and coming this Friday, it is going to be Fabulous Friday because I'm going to be doing the worldwide online master trader series. And folks, is the market a mystery to you? So when we take a look at this morning, take a look at the Dow futures being off, S&P futures being off. If you go around the world, you got the DAX off 141 points right now. You got the FTSE down 116. The only thing that was green last night was the Nikkei up 20 points last night. You had the Shanghai off, 13, 14 points. The Hang Seng down about 229 points. Over in Italy, are they having a party this morning? Absolutely not. Over in Italy, they're off about 203 points. So is the market right now a mystery to you? When I spent a lot of time over the weekend relaxing and also working on this Friday's upcoming webinar and watching, the son of a good friend of mine win the TPC golf tournament up in Jacksonville, and what a time to do it on Mother's Day. And folks, it is, so when I take a look, the question is the market really a mystery to you? When I took a look at what I'm really doing this coming Friday is I'm turning mystery into mastery. And how I'm doing that is just with one letter. One letter, just that letter A, just beginning with the A to B equals CD pattern. That's how you turn mystery into mastery. So let's go take a look at these markets. Let's go master these markets. Let's go see what, in fact, they're doing. First, I'm going to switch over to the ES Mini, and we're going to go over to the daily chart. Let's go take a look at the daily chart and see what's going on there. It's going to take me a minute. Now, folks, you can watch us on TigerTV. You can always catch the archive of this show on Channel 9. So if you're listening to us on the radio, we absolutely appreciate that. You can always, later on in the day or tomorrow morning, whenever time you want, you can always catch the archive of the show. And the archive, folks, it's great because you're going to be able to see my charts. In fact, even if you're watching live, you can go back, you can replay the charts, you can lay things over on your charts. You'll want to do that because we want to be able to teach you how to master these markets. That's what life's all about. It's not about dabbling. It's not about stressing. It's always about mastery, folks. And if we take a look at what these markets here are doing so far this morning, well, we're going to really first let me get rid of some of the lines up here just to clear things up on your charts, make it a little bit easier as you're watching us on Tiger TV. I'm going to go ahead and get rid of this line as well. So let's start. Oh, I guess that wasn't a line. There we go. Let me make sure. Okay. So what we're going to really start taking a look at here is the low on March 7th. That's where we're going to begin our journey this morning on the ES Mini. The low on March 7th, 1335.75. 1335.75. Write that number down, folks. You know what the ES Mini got down to at about 7:10 a.m. this morning? 1335.75. How do markets do that? How do they go right to swing points? How do they test those areas? In this case here, right to the T. Now, as the ES Mini was doing that, if we're taking a look, I'm going to blow this up here on my screen. If you're taking a look at the daily chart, what was actually also going on was the ES Mini was making a 3 drive to a bottom pattern. That's just one of the patterns that's out there. 3 drives to a bottom, 3 drives to a top, folks. Real key patterns to be able to understand. More importantly, and the reason why you understand is you can learn more from failure than you can from success. No difference in your life, no difference in the markets. And when I say you can learn more from failure, because if this area here fails, and it can go down, it can punch down, I expect as we come into the open intraday, maybe during that first half hour of trading, I expect that that area will get tested again. It'll get punched down through there, and we'll go take a look at some of the intraday charts just to understand why. Part of the reason why is because of my hammer. And my hammer candle gave me the signal this morning after about, I don't know, maybe just a little while ago, that in fact that area will be tested. I think we'll go ahead and punch through it, and then we'll see if the market is ready to bounce back. Well, when you take a look at, the daily chart, one of the other things you want to take a look at, because here we're taking a look at the March 7th swing point. That's the first key swing point that we're out here. If that area fails, meaning you get a close below on the ES Mini, you get a close below 1335.75 today, what you're going to see is you're going to see the market head to the next swing point that's out there. Well, the next major, and when I talk about swing points, folks, I'm just simply talking about major intersections. As you're driving this morning, or maybe as you drove to your office this morning, or maybe you're going to drive after the show today, you're going to go past major intersections. Inside the charts that we look at, there are major intersections. There's minor intersections. There's crossroads, just like you pass as you're driving along, but it's those major intersections that have got the stoplights. They got the stoplights that sometimes you run and sometimes you stop at them. Sometimes they just simply turn yellow and you stop. Sometimes they turn yellow and you speed up, and they turn orange as you're going through, and it crushes right through it. And if this market blows through 1335.75, the next major intersection is all the way down to the December 20th, December 19th area. December 19th, let's see here. December 19th, the low was 1195.50. 1195.50, folks. Right now, you're at 1338.75. So, if you think you've missed something to the short side, you haven't. Because if this area here doesn't hold, there's a long way down below. And then after that area, you've got November 25th. Well, November 25th, that whole area has got no volume whatsoever. Why? Because that was the Thanksgiving Day week. And, so you had light volume on Wednesday. You had relatively little volume on Thursday. There's not enough buying down there to hold anything. So you start to get below December 19th. And what's that say? It says, sayonara, we're going to go back and visit the October areas. Now, it is important to take a look at December 19th because that is the next key intersection that's out there. And if we take our retracement ruler, we go down to the low on the ES Mini, that again is at 1195, even Steven, all the way up to the high on the ES Mini. That happened to be put in on March the 27th. What you'll see here, you'll see that first line that we're coming across is 1334. That's your 0.382 retracement. Remember, there's 3 levels of retracement that you absolutely want to burn into your soul, because it happens not just in the markets, it happens everywhere in life, folks. It's a 0.382 retracement. The next area is 0.618, and after that, it's 0.786. That is what you want to be able to take a look at. You will see here as we came back into this December 19th area, right now, 1334, and I mentioned this morning that the ES Mini got down to 1335.75. We're not so worried about being exact to the tick, even exact to the dollar. We don't mind rounding around here because we like outstanding results. Because when you get outstanding results, folks, you have extraordinary rewards, and that's really what it's all about. So right now, you've got on the daily chart, you've got a 3 drive to a bottom. Doesn't matter whether you're in the daily, whether you're in the 60, whether you're in the 30-minute, you can draw that same pattern out there. You're also coming up against that low of 1335.75 from March the 7th. You are absolutely at a key area. What does that really mean for you today if you're not really paying attention to the futures or trading the futures? Well, then let's go take a look at the index for you. If we go take a look at the index on the S&P cash, we'll go take a look at that. And what we're really talking about there is March the 6th. Now, March the 6th, folks, the low there is going to be 1340.03. You're absolutely going to test that area. And we go switch over to the SPYs. Now, your next area, that 1219 area on the S&P cash, gets you down to a low of 1202. 1202.37. We don't really care about the pennies, do we? So what you want to do, if you're long and strong in this marketplace, you want to make sure that you've got some excellent money management principles in place. You certainly want to understand the A to B equals CD. If you take a look at the just the simple A to B equals CD pattern here on the S&P cash, that next area is 13. Looks like, let me lean forward here, 1332.77. That'd be a 1 to 1.2 A to B equals CD. It makes sense that area is going to get tested. So don't, expect today, you got a low here of 1340 on the S&P cash. Expect it to pull down, test that 1332 area. And folks, what you are also seeing here, you're seeing this red uptrend channel that's been drawn here since October the 4th. Real powerful channel that the S&P has been in. Today, it's going to be testing the bottom of that area. The last time down, it held. We're going to see today, we're certainly going to see tonight whether that area is going to hold. Thanks so much for joining us. When we get back, we're going to also go see what's popping in the pre-market and what's not popping. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Dow futures off almost 100 points right now. ES mini off 12 1/4, trading out at 13.37. Oh, King Dollar, though. King Dollar on the move up 38 ticks, trading out at 80.79. We'll go take a look at the A to B equals CD there. You got gold getting smoked again this morning, down 23 bucks right now, trading out at 15.61. Silver not doing much better, off 1.5%, down 43 cents right now at 28.46. Light sweet crude, it is getting a little bit cheaper at the pumps. So let's get on that crude bandwagon. Keep moving south. It's trading out right now at 94.35. That's down $1.80 in the current market. If we go take a look at what is popping, what is dropping in the pre-market from an earnings release standpoint, you've got Inter Oil Corp, IOC. They closed out at $57.61. Last trade firing off just a few moments ago at $50.16. That's down about 13%. Let's see here. What do they have listed here, if anything? Let's see here. So their Q1 revenues, $338 versus $243, not too bad. Their profit, $9.4 million versus $669. Their outlook must not be very good because it's trading down 13% right now. You've got Sky Mobile, M-O-B-I. I thought TFNN was the only M-O-B-I out there. In fact, if you go to TFNN I think it's ./M-O-B-I, you can listen to us on any device out there. You can listen to us live, M-O-B-I. That is the ticker symbol, though, for Sky Mobi. And they're trading down 5% this morning. They closed out at 271. Last trade just fired off at 257. It's www.tfnn.mobi. That's to catch us live here. Then you've got NAPCO Securities, NSSC. It looks like NSSC. They closed out at $4. Let me make sure. No, $3.11. They're trading at $2.97 right now. Let's see here. Silver Wheaton, SLW. We'll go take a look at their chart in a moment. 24.46 is what they closed at. They're trading out at 25. Well, how can that be down 2.8%? 514, 25.72, 26.46. There you go. They closed out at 26.46, trading out at 25.72, down about 3%. Not a huge deal out there. To the upside, again, not much in the way of earnings releases this morning. You've got PFSW, PFS Web. They're up 17%. They closed out at 392, trading out at 4. Now, I wouldn't be paying too much. Last trade says it fired off at $4.59. Of course, the trade right before that was $4.01. There's somebody there that doesn't know how to trade the pre-market. You've got PFS Web. Let's see, you had $74.5 million versus $72.4 million in revenues. They had a loss of $1.3 million versus $2.3 in the prior year. And let's see, you've got Jink Solar. $5.41 is what they closed out at. They're trading at $5.45. Again, not much going on in the pre-market, so we're going to switch over just simply to the futures market, take a look at what's going on there. Now, on the 30-minute chart, that's what I've got up on my screen. Let's switch over to the 10-minute chart real quick. So as the market was moving down into the 7:10 a.m. time frame, thought I'd change that to 10. Let's go back and do that again. into the 7:10 time frame. That low was made right here, 7:10 a.m. And when we made that low, or when the market made that low, did it with a bullish engulfing candle, moved a little bit higher right after that. And then what did it do? It's been in this little tight consolidation range, made a 100% move, just simply getting up to the 5:20 time frame, coming back down right now inside that bullish engulfing candle. I do expect the lows, 1335, to be tested, and I expect we'll see that during that first half hour of the open. If we take a look at the 60-minute chart, which is what I had on the screen before, at the 60-minute chart, you had a bullish sign out there. I already showed you the 3 drive to a bottom pattern coming in at the 0.382. You also had this hammer candle. But from my standpoint, this hammer candle failed going into that 8:30 session. That tells me also that 1335 area is going to be tested. Let's go take a look at silver wheaten. Let's go see where that is trading. Again, the ticker symbol on that, folks, is SLW. Let's go take a look at that chart because it is trading off in the pre-market. What did they say here earnings-wise? Let's see. Can't find it here just at the moment. When we get back from break, we'll go see how these markets are going to pop, and then we'll go take a look at silver wheaten. Give us a call, folks, 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Races. You got the Dow down 90 points. S&P's off 11. You've got the composite off 24. Small caps down 1.6. Leading the charge on the way down is the S&P 500. Neck and neck right behind it is the composite, both down 0.8%. You got Microsoft trading down 32 ticks right now, out at 30.84. Intel down 30%. That's off 1%. You got Google down about 0.6%, off $3. Cisco up 11 ticks. Apple down $1.50 right now. Let's see, leading up on the way, leading on the way up here, pop into the way up, I should say. Vertex Pharmaceuticals, VRTX, they're up 4%. They're trading out at 64.68. That's up $2.50. BMC Software, BMC is the ticker symbol there. They're up 4%. That's up $1.68. Francesca Holdings, FRAN. I think, folks, I think Vertex and Francesca, both of those were absolutely getting crushed on Friday. Nothing more than some dead cat bounces going on there. Francesca up about 6.7%. Don't get in the way of that. We'll go take a look, but do not get in the way of that. That is a damaged stock. Avon Products, ding dong. They're up about 4%, up 79 cents right now. Chesapeake Energy, CHK. I heard that Carl Icahn has got an interest in Chesapeake Energy. They're trading up 71 cents. That's up 5%. I don't know if I would get in the way of that as well. That is a broken stock, I believe, to the way down. Leading the charge on the way down, Inter Oil Corp. We covered that earlier. IOC, they're off about 10% this morning, down $6. You've got Advanced Auto Parts, so that's kind of interesting. You're starting to see some of the leaders here. Well, we've already seen some of the leaders giving it up. Now you've got Advanced Auto Parts, AAP. They're down 4%. That's off $4. You got CF Industries, CF being the ticker symbol there. They're down $5 and change, off about 3%. Ancestry Communications, ACOM, is the ticker symbol. They're off 14% this morning. Wynn Resorts down, WYNN. They're off about 3%, down $3. You've got Goldman Sachs trading off $2. That's down 2%. Salesforce Communications, CRM, getting a little whacked again this morning, trading down $2. And folks, if you are in the New York area, I believe that Tom may already be starting to address the folks there at the Hard Asset Show. Tom will be up there for the next couple of days. We do have a TFNN booth, so if you're in the New York, New Jersey, Boston, wherever, the area where you can get on a train and get to New York in an hour's time or so, go in, stop, visit Tom, and don't shake his hand. Give him a big hug. Would you give him a big bear hug? I think he'd like a bear hug, don't you think? So he's up at the Hard Asset Show. That's today and tomorrow. That means that next hour I'm doing a doubleheader. I'll be here doing a solo operation. And then following me, we go up to Newton, Mass. We go up to our man Basil Chapman. We'll ride the wave all the way out to Tucson, Arizona for Larry Pesavento from 12 to 1. And then David White will be the warm-up band for the Tom O'Brien Show, David's show from 3 to 4. What I do have up on my screen here right now is the DAX. We'll certainly want to pay attention to the DAX. Reason being because it's going to close at about 11:30. This is going to give you a pretty good indication. Our market's going to close at their lows. Is there going to be any bounce? What are we looking at? In the case of the DAX here, when you take a look at the red line on TigerTV, you'll see that the DAX is making an A to B equals CD down, and it's got a big thrust here. That A to B equals CD down 1-to-1 takes you into the 6170 range. It's not going to stop there, folks. It's going to go all the way down to first where it gapped up. And the gap up, folks, is on December the 30th when the DAX gapped up. You're going to look for the DAX to get in that 59.78 area before it gives you the next piece of information. Close today underneath the high from October 28th. October 27th is a key area for us in our markets. In the DAX, that is at 64.30.60. So you're going to want to keep your eye on the DAX. The DAX closes underneath 64.30. That is giving you a good indication that the DAX is going to start seeking out those lower levels sooner than later. What's that all about? Well, it's really all about the euro. If we pull up the euro, that's the Japanese yen here on Tiger TV, but let's go pull up the daily chart on the euro. It is the euro. Nobody wants to hold on to the euros. Euro is headed all the way back, really, quite frankly, euro's headed all the way back down into the lows from January 2012. And the euro is going to get down there quick. It's right now trading out 1.28. Let me just come over here. It's easy for me to read this number. 1.28272. But where the euro wants to head to, the euro is already inside the swing point. So the euro is already inside the January 13th swing point. When I take a look at the ABCs, how the euro came off of the C point, came off with conviction. It has been steadily trading down for many days in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row on the euro, and the euro now trading inside the swing point from January 13th. The swing point high there, 1.28771. The euro, quite frankly, now the low of that January 13th area is 1.26229. Just slightly underneath that. If we go, I don't know if I can do it on this chart here. Let's see if I can do that. It might be. But the August 2010 area is really what acted as support on the euro. In fact, it's a significant area inside our markets. If the August 2010 area ever gets taken out, first if it gets taken out on a stock chart that you're trading, stop riding that thing down. If the August 2010 area starts getting attacked and you get a close below it, you will see Tom's 825. I can guarantee it. I'll put that in writing, folks. Not that matters to you. So the euro is on its way down. It's going to be testing the lows back in early January, which means it's really going to get back into, what has been a very, very strong set of P index dates, August 24th and 25th, going back to 2010. The low there on the euro is somewhere right around the 1.25 and change range. Looks like about 1.258 range. That's on the euro. Let's go take a look at the king, because the king looks like Tom took the king further north. And what I mean by further north, folks, right now trading out at 80.83. It is not only going to test the swing point. The next move of the move on King Dollar takes you up to 81.16. You're trading out at 80.83. Looks like it wants to get up there today, wants to do it in a hurry. If you take a look at the smallest AB equals CD pattern that's out there, what you would do, folks, is you would start down at the bullish engulfing candle, the low of February 29th, David White's birthday. That's when it was out at 78.12. You'd go all the way up to the swing point we just mentioned, March 15th. That was the high of 81.16. And then that C point is going to be the lows of May the 1st. Makes sense, right? You got the lows of May the 1st. On the dollar, the high in the market in most of the stock indexes being May the 1st as well. 1-to-1 takes you up into the 81.70 range. That makes more sense to me as really its next stop. That then creating a move going all the way back to the January 13th high out at 82.04. Looks like it wants to also do it sooner than later, and that is where the dollar is headed, folks, and the market not digging that. So let's go switch back over here real quick to the ES Mini. Let's go see if that 1375 area was hit. or 1335. Remember, the low that came in at about 710 this morning, 1335.75. You did manage to get down to 1335.75 once again. Let me just switch this over here to a 10-minute chart. So that's the first area. So we're going to have to watch and see that, because that's happening really as we speak during the 9:50 hour. And we're going to have to see what kind of candle formation is created down there. That's going to give us our next piece of information. The bullish engulfing on the 10-minute chart is what it's up against at that 1335.75. You want to understand your candles and your A to B equals CD patterns, folks. Let's go take a look at the volume now. Let's switch over into the ETFs out there. We're going to switch over and take a look at the 5-minute charts out there. So let's see what kind of volume it is that we have. Since we were looking at the S&P, let's go take a look at the SPYs. And we'll look at the intraday. We'll look at the 5-minute chart. You can see you had volume of 4 million in the first 5 minutes of the open. Then you had volume of 3.1 million. Right now, we still have another 2 minutes, and you've got 3 million shares. So volume picking up to the downside in the SPYs. Below its most recent on a 5-minute chart, below its May 9th swing point out there. Let's switch over on the SPYs. We'll just kind of go back and forth here just to keep it easy for you, hopefully easy for you to pay attention to. Of course, I got to see where I have these charts. Let's go over to now the daily ETF for the SPYs. So we'll go to the 10-minute. We can see volume picking up on the 5-minute charts, and on the daily chart, you can see you are down below March the 6th. Now, March the 6th had 201 million shares. The last time you tried to pay a visit there, you had 220 million shares. So the SPYs giving out the signal that it had the volume 4 trading sessions ago. So that'd be Friday, Thursday, on Wednesday. When it came down there, even as it came down on Tuesday with 213 million shares. So, maybe towards the end of the Money Masters show at about 11 o'clock, we'll have a better gauge of the volume of the market. We don't want to gauge it off of the first 15 minutes here, but during the first 15 minutes, you do have 14 million shares. Let's see, if I were to do straight line math on that, 30, that would be 60, that would be a lot of volume, folks. That would be a lot of volume. So we won't do the volume there because that's like, 360 million shares or so. And not that can't be done. So you're going to want to absolutely watch the volume, and you're going to want to watch the swing point from March the 6th. You're going to want to watch today's close. Now, what the SPYs are doing, they're just simply completing an A to B equals CD down. That's what they're doing at the moment. The 1-to-1 A to B equals CD down, is what was hit coming into the, I guess it was first hit on Tuesday last week as it came down on May the 8th. You were coming down there with too much volume. Next area here, 1.272. Expect the SPYs to get down to the 133.40-ish range today, and we'll see what kind of volume. Now, what you've also got down there is you've got a gap. So to fill the gap, you'd have to see the SPYs get down to a low of 132.21. I gave you the 1.272 as 133.44. And folks, I really do appreciate you listening to this show. Was fortunate enough to sit in for Tom's show with him during the first hour on Friday, and then David and I did the second hour. And, it's all really about the New York Stock Exchange. If we go take a look at the New York Stock Exchange, I identified that last week, spent a lot of time on the New York Stock Exchange just simply because of the hammer candle that was formed out there. So let's switch over and take a look at that. And that hammer candle failed. And, folks, you always want to go back and take a look at charts. You want to take a look at chart patterns because they absolutely will help to guide you into the future. And that hammer candle failed on the next session. That hammer candle came in on May the 8th. You closed lower on May the 9th. And if you went back and studied all of the other hammer candles inside the New York Stock Exchange, it was telling you that there were lower prices coming. Well, the 1-to-1 is where it got down to on the session on the 9th. Today you're closing below that. You're trading below that. Of course, we know all of last week after that hammer candle, we were closing below the October 27th high. So if we take a look at just simply A, B equals CD patterns, and why is that important, folks? Well, it's important because, if you have been a bull and you've been fortunate enough to, let's just say that you happen to be one of the people that, rode the market down from all the way back here in 2007. What do I have up here? I got just the 2011 area. Let's say you rode it all the way down here from 2007 down to the March lows in 2009. All that the New York Stock Exchange has done is basically a 0.786 retracement. And what's really key about the New York Stock Exchange, really key for me, is this point right here that I'll draw in for you. I'm going to draw that point in. This happens to be August the 17th, 2007. The low out there was 93. Let me get my glasses here. Let me get my magnifying glass out. 93.32. I have to go back to the eye doctor. Tell him magnify these a little bit more for me. 93.32 was the low out there on August the 17th. August 17th, folks, happens to be a set of planetary index, a set of planetary alignments that over the last 200 years had always acted as a low. I remember that day well because I was short going into the market and reversed and went long. And that worked out to be pretty well all the way up into the highs going into the again, I switched over into the the October 2007 time frame. Now, that August, why do I bring up that August 17th area? Because on the way up, when you take a look at the New York Stock Exchange, which is a much better breadth of the overall market, that area never got penetrated. Did it on the SPYs? Did it on the Dow? Did it on the NASDAQ? Absolutely. But, folks, you're talking about 30 stocks or 500 stocks or 100 stocks. This is what it is that you want to be paying attention to. If you haven't added, from a charting standpoint, taking a look at the New York Stock Exchange, please do it, folks. And what this is signaling to us is we're not out of the bear market by any stretch of the imagination. Sorry to be the bearer of bad news, but that's what the charts are saying. We'll be right back. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. You got the Dow trading down 118 points, S&P's off 13, Composite off 24, small caps down 8. And, when I was talking before the break, about taking a look at the New York Stock Exchange and giving you that bearish outlook and taking a look at that August 2007 date, that is the longer-term picture. We go back to that time frame, and you're going to see several bounces, on the way down. So the market's going to give you opportunities to get out. The market's also going to give you opportunities to get in to play the market on the way down. And right now, it's not time to jump on playing the market on the way down. And the reason is, when we take a look at the coming up to the 0.382 retracement area from the December low to the high back in April, when we're taking a look at the ES Mini, the S&P futures, when we take a look at the 3 drive to the bottom pattern that was set up coming into the 7:30 a.m. time frame, the hammer that was out there, seeing the failure from 7:30 to 8:30, knowing that area should be tested. I mean, if you want to be able to take the mystery out of the markets, you want to be able to master them. Just one letter, A, B equals CD, as well as many other things that I'll be teaching all the students that will be attending the Friday session. I believe they're in the process of changing the price, like right now, sort of as we speak. So if you didn't get in on it and you would like to, I'd go to the homepage right now of TFNN. If you were even thinking about it, then that should be your signal to make, what you were thinking about a must. It's always about making things a must in your life, folks. And, I'll be able to teach you those patterns so that you know what's going on out there. And for your trading style, whether it's intraday, daily, whatever it is, you'll be able to utilize these tools to be able to trade the markets and trade the markets much, much better. And you'll be able to tune out all of the noise. This has nothing to do with JP Morgan. Who cares? And who cares what the information is? All you really want to do is take a look at the chart patterns here. And this 3 drive to a pattern, this 0.382 normal area that you've come to, folks, we're either going to get one heck of a bounce or one heck of a failure coming out of here. If we have one heck of a bounce, I talked about the August 17th time frame as being a very key set of planetary index dates. Well, so is this coming Friday. So not only will we be doing a buying and selling the D point, a full day of mastery, but what we've also got happening, is a day with 2 planetary index dates, only like 67 in a 300-year period. So few, it's hard for me to go ahead and chart those on, or plot those on a chart to have any kind of meaning, because I don't have 300 years worth of charts. And some of that time period is, when I talk about 300-year time period, I'm talking about 1800 to 2100. We're just a little bit shy of the 2100 area. But you can expect this weekend, well, I don't know whether, it's not necessarily to the day. We look at these as being timing tools, and so we take a look at price and other patterns guiding us to being able to take positions. But so in Friday we've got a 2 planetary index date. We then have a new moon. We've got apogee. We've got the new moon that happens to be a solar, a new moon coming in. So we're talking. We absolutely have everything. So it's going to be Friday, to Monday as being a lot of action going on out there. If you get a bounce, so if you have this point, if you have this 3 drive area here that holds up during the day, and you get a bounce out of here, what you can do is you can wipe your forehead, and you can be thankful that the markets have given you an opportunity to get out. If you're sitting in there in the long term, you're with long-term trading, if you've got the opportunity just simply to go in and out of a market with your 401k, and 70% of the people, folks, rode the markets down from 2007 to 2009. That's a lot of pain. You don't need to experience that pain. You can always jump back into the markets, but so far, the markets are giving us a signal. Sell in May, come back in October, might not be such a bad idea, folks. Thanks for joining me. Stay tuned. I'll be up next again for another hour. Then we go to Basil Chapman, Larry Pesavento. Have a great Monday, folks.